The largest short sell ever recorded. What is it and why should we be paying attention? More importantly, what are some of the biggest traders actually doing to combat this? In today's video, we take a look at what's ahead in a week that is going to be dominated by inflation concerns. Yields are holding important levels, Nvidia is popping off past options flow positive gamma, and Tesla continues to struggle. As we thought for a while, it looks like things might get worse before they get better. In today's video, we'll cover stocks, commodities, and cryptos with everything that you need to know right now. Well, welcome back everybody to The Daily Show, where we simplify the complicated when it comes to markets. There's a lot to discuss because, of course, we've got stocks going into positive gamma and the biggest short sell ever recorded when it comes to the crypto market. Yes, the latest data that we've shared over on X, links in the description down below, shows that when you combined all of the Ether cash settled leveraged net amounts, you are getting the biggest short sell that we've ever seen. And at first glance, you might be thinking, wow, the worst is yet to come, but maybe not so fast. Well, obviously on this channel, we've talked about this from the likelihood of China rallying, which it has so far done, and also from the fact that everyone was bearish on gold just a few weeks ago. And of course, we saw what happened there. Remember, sometimes it pays to be greedy when others are fearful. So let's just take a look at the situation right now in the crypto world. First up, what have we got going on when it comes to actual flows from the biggest players? Well, it looks like flows are now going bullish once again. And we've seen this in a few things that we've shared over the last week of videos when we had the largest ever, and remember this, largest ever liquidation of us as retail traders ever recorded in the crypto market. That's actually what happened last Monday off that shock crash. Now, since then, we've seen a huge inflow, and often what we say here on the channel is do what they're actually doing, not what they're saying. Dark pool liquidity was increasing. We saw some big, heavy hitting names starting to buy Ethereum and other cryptos for their funds, and people were taking advantage of some of the most traded zones. These are areas where big funds have historically been placing large transactions. Now, to make matters even crazier when you start to think about it, we are also now seeing almost maximum fear when it comes to most crypto fear and greed markets. Now, this is important because, of course, when you look at price action of Bitcoin during these fearful times, we're generally either forming a base or we're about to explode to the upside. Now, ultimately, it's going to come down to price action, which we'll look at later on today's video. But just remember, this is a huge change from where we were during the November period, where, of course, extreme greed took over and everybody thought crypto was going to the moon. We just recently surveyed you guys actually over on X, and we found that 56% of respondents believed that crypto would be up over the next few months, and the rest obviously thought it would be bearish. Now, I have it on fairly good information from you guys that a lot of communities are actually way worse than that, and people are believing that there are more bears now in crypto after last week's liquidation than ever before. Now, could there be reasons for that? Of course, we've got MACD divergence across Bitcoin in general, and some concerns about dilution, which has become the big thing here as there are more coins for everybody to look at, and that spreads the money too thin. Well, in today's video, we'll take a look at those, but let's discuss stocks for a moment because we're seeing a similar phenomenon there, and that is that people are just getting way too crazy with their money. We already shared on the weekend video that credit card debts are absolutely ballooning. And on first glance, you might say, well, this is pretty bad. Well, actually, it's bad longer term and good shorter term, because what it means is people are feeling confident enough to take a lot of leverage on to get rich quick. And we're starting to see that through 3 times leveraged ETFs in the stock market, and of course, just general in options flow. The trend will be the most important thing of this year, and obviously one of the levels is going to make a big difference this week, and that one is going to be 6,100, a positive gamma or options flow change level. And as you guys can see here, if we take most kind of years together, then what could we be looking at over the next few months? Well, possibly we may stay in this sideways action. If we follow some of the similar periods of time, we could stay chopping, or what we call a pullback in time, and then we could break out. Ultimately, we'll be looking for flows and obviously paying attention to that. Another big popular thing is, of course, what tends to happen during February. The first half is up and the second half tends to be down. And you can see here the latest chart from Grant Hawkridge tends to go over this. Now, this doesn't mean that you just go out and sell the market in the middle of Feb and say, oh, that's enough, we're done with it. Remember, seasonality doesn't always have to occur, but it is a bit of a guideline should you see price action go with it. Remember, it's all about the flows first, the technical analysis, and looking at where the big movement's happening, and then seeing whether it agrees with the data just helps you gain confidence in that situation. If we take a look at what basically the data of is here in terms of cycle composites, then a lot of people are believing again that the chance of a sideways action could be there. And then we may have a nice ramp followed by potential of a bigger sell-off later on in the year that could be upwards of even 10%. And then, of course, people believe we'll end the year strong. And why wouldn't anyone believe that we may end the year strong? We have 39.4% of all of the S&P 500 now made up of top 10 stocks. Yeah, well, actually, it doesn't seem that bullish, does it? But we do, but at least they're making money, right? So, of course, concentration has become the big thing that everyone's worried about. Probably the biggest bear story of 2025. And ultimately, this will be a problem. But you've got to remember, at least there's a difference between dot-com bubble and now. 34.1% of all income comes from these top 10 stocks. More importantly, the stocks are living up to expectations. Have a look here at the S&P 500 Aggregate EPS Surprise Index, which just made a new high for this earnings season. And as we've argued, if you took tariff discussions away, by the way, new tariffs have just been put on and steel and stuff, we'll get into that in a moment. But basically, we have a very robust earnings season where it looks like even the degradation of revisions going on, which usually does happen during earnings, is not very bad. We are actually seeing a market that is living up to the expectations. And as we mentioned, if we had 80% of this, which we are absolutely kicking goals on at this stage, we could be looking at a market that could enter into the last third of a bull move. Ultimately, 6,100 will be one of the most important levels to watch this week. But do remember, we are still in earnings season. Nvidia is coming in terms of earnings, which will be the most important of them all. And CPI is also happening this week, along with PPI and retail sales. Now, what's important about CPI is it seems like Jerome Powell, yes, the Federal Reserve, is coming out both before the CPI and after the CPI to have a little discussion. How ridiculous is that? So he's no doubt going to have all things to say, and will have to be, very well aware of what occurs in that particular two kind of session period. Tuesday and Wednesday will most likely break us out of a range. And if they do, then of course we could be looking very bullish or very bearish, just like that. Speaking of bullish, if you're not familiar, Bitcoin, even during the max fear that we're seeing right now, or close to max fear, is actually in a seasonal pattern that tends to do well during February. In fact, 82% of the time, Bitcoin has been bullish over 2014 to now, so almost 10 years of data. And 82% of the time, we've generally seen the bulls kind of take control. Flows also have been positive into both Bitcoin, but overwhelmingly into Ethereum during that absolute nasty sell-off. So we'll look at price action on that very, very soon. What about the market? What was the story of the last 24 hours? Well, metals were going ballistic. Obviously, reinflation concerns are now going to be the discussion of this week. Gold, new all-time high, very nice. Semiconductors, led by Nvidia, pushing through that 130 positive gamma wall, and energy stocks also on the improve. So again, probably counter logic to what you're reading in the news, and this is why you've got to really pay attention to flows and price. Last 5 days, you can see here semiconductors actually the third best performing sector. Now let's take a look at the stock market, then we'll go to options flows, then we'll go to leads, and of course look at some of the most important single charts. But first up, S&P 500, it's all going to be about 6,100. So this 6,100 level is the core wall. You can also see it has 2 week rejections off it. And if we manage to break and close above that, then at least from the options flow perspective, which we'll look at in a moment, we should be going towards 6,200. Now, this is going to be probably the most important kind of break that we're looking at. Between 5,900 break below, could be looking at 57 and a big sell-off, or 6,100, which is going to be a core wall. And of course, we break above that level. So let's now take a look at the options flows and just really demonstrate why these levels are so important. Whether it's the 11th of February or the 12th of February, I think everybody can see the amount of calls at 6,100. We can also see the power of the 6,000 level now coming through from the put wall, and that's why we're trapped within this range. At the time of this recording, we're at 60, 67, but as we've seen, 6,000 has held several times over the last week, and of course, 6,100 has been too much of a match at this point. Now, if we do push through 6,100, then of course, 6,200 becomes the next target. And the main reason we see that is because when you take a look at all expirations, that is the main strike in the options market. So a lot of things could happen, but make sure to watch the channel and of course, set those alerts, guys. It's going to be a big one. Now, speaking of alerts, poor Tesla. Yes, we haven't been that bullish on Tesla in recent days. And the main reason is it's given up some key levels. It's got a lot of negative sentiment on it at the moment. And of course, it's driving down into a more fair price. Now, you may argue that Tesla is no longer a car company. It's an AI company. It needs to be revalued. But I would argue 200 times forward earnings was too much. So, of course, we're getting closer to a better price. And of course, at the moment, if you're looking at the options levels, you'd say 350, which is where we just found ourselves at, could be a put support. I've talked about 330, 340 being key levels. And of course, we'll need to watch this over the next 24 hours. But we are getting closer to those important levels where if Wall Street's going to bid it, we're almost there. What about the big move on Nvidia? Well, of course, getting through 130 is a huge level. And you can see here when you start looking at the strikes, it points towards the potential here of a positive gamma squeeze that could get us all the way back up to that 150. And if we get through 150, yeah, it's going to be huge. Now, earnings is coming, and we have seen some big names already announce they believe Nvidia is a buy the dip into earnings. What do you guys think, though, in the comments down below? Let us know, because Nvidia earnings, which we'll have a focus on next week, could make or break whether this market is actually going to go down or whether it's going to keep pushing and climbing the wall of worry. Let's talk about the bonds market now. Bonds and options, no causes for concern just yet. US yields, whether you're looking at the 30-year, the 20-year, the 10-year, what you're going to notice is that most of them are on trend lines. And obviously, these trend lines are going to be pretty important when it comes to what happens next. If we do see a break up in the dollar after the inflation numbers, then that could put downward pressure on a couple of investments and a couple of areas we'll talk about. But if we break underneath, then that could mean that the Federal Reserve may still be cutting. Remember, the market went from saying there's going to be so many cuts in 2025 to now saying, well, maybe there's going to be a lot less. This week, we have to expect that that's going to change quite a lot. And we'll update what the expectations of the market are in terms of how many cuts we're going to get through 2025 as we see Jerome Powell and, more importantly, the PPI and the CPI numbers. Treasuries, this is a breakout at this stage, but again, yields are going to be the concern. If we break and take some of those trend lines on the way up, then this is going to be great for treasuries. We could be moving to 94 very quickly. For now, it has broken out, but it hasn't shown necessarily it means business. What about XLF? Well, of course, this is the financial sector. It's still just made a new higher high. And as they say, wherever financials go, if you've got financials in your market, you're generally in a bull market. That doesn't mean it's going to be a great, massive gains, fantastic, 25% S&P year. But it does mean that for now, at least, the debt system isn't showing signs of significant stress. US dollar will also be worth watching. We'll update on the prices here. It's stuck in the middle of limbo land at this stage. And gold. Whoa, guys. Yes, as we mentioned over our live stream, which we do every Monday for free, we do also have private streams Tuesday, Wednesday, Thursday, etc. In the links in the description down below if you join us over at fxevolution.com. But take a look at this. That broke the 2911 and we are almost there. 3,000. A level that we spoke about 18 months ago, maybe even longer ago, and we have been consistently bullish on. It's one of those calls that I guess, seems easy in hindsight, and it pretty much is. This is actually one of the easiest calls of the last couple of years. But, for a long time, gold was one of the worst investments out there. And of course, when things go into lost decades, which gold did, it's very difficult to pick the timing. Either way, we're in geopolitical tensions. We've got BRICS versus SWIFT. We've got all sorts of things. And ultimately, you have central banks buying out of control and some inputs just to be able to pull gold out of the ground going up. So is it still primed? Yeah, it could go even higher. What do you think, guys? How high will gold go by the time it ends its bull cycle? For now, though, incredible strength here. And I would be starting to say, just before 3,000, if that was your aim, you might want to be starting to think about like maybe a little scale out because it's starting to move at an accelerated pace. Now, what hasn't moved so much has been silver. 3270 will be an important level for silver. If we break that out, silver could start to play some significant catch up. So silver, don't sleep on that one either. What about US oil? Well, it's in limbo land. This is going to be the hardest trade of 2025. Geopolitical tensions cause all sorts of problems. And unfortunately, with the flick of a finger, you could see, or a tweet or anything like that, you could literally see huge amounts of money being wiped off. So I would be a little bit careful. US oil's coming back to that kind of most traded area. So for now, I'd say it's at a little bit of resistance. What about Tesla? Closes on its low, generally would signal there's further selling to come. And we may be going down to that level we spoke about for, feels like $150 now, but it's been, I guess, close to that. And this area down here is probably where you're getting towards a fairer price for Tesla. So will we get down there? Well, for now, there's no reason to say there are any bids here on Tesla itself. Where we have seen bids, Nvidia. Take a look at this through 130. Gap fill obviously at 143. Back in positive gamma ahead of earnings. Oh, things are certainly starting to get very spicy for the biggest and best semiconductor out there. And you'll notice that a lot of people that, of course, will be bearish on Nvidia through the Wyckoff distribution up here, they'd be starting to say, well, we wouldn't want to see it break this level because if that happens, it invalidates everything here and it pushes that narrative that we're going to get a significant new high. Market's going to keep pushing on and we might be looking at a 180 plus Nvidia relatively soon. Now, the most traded zone was always going to be a great area. We know we saw dark pool activity down there and congratulations if you did buy that level. But again, earnings will be probably the clincher here. What about some bottom basement dweller semiconductor stocks? And I mean, this is bottom basement dweller. Maybe if you're playing World of Warcraft hardcore or something, you might be still using an Intel chip. But it looks like nobody else is using Intel chips because they are crushed on the markets right now. And this area here, yeah, it is a very interesting one because it's oversold on a lot of metrics. We've got an alert, of course, above this 2040, and it looks like it probably is base formation. So what that means is that if you look at the volume down here, it's remained incredibly consistent. Wyckoff's third law was consistency in volume throughout kind of a basing structure or an accumulating or distributing structure can tell you that the biggest players are getting involved. So we might be watching Intel like we are AMD at this stage and seeing whether they are going to provide decent trades in the upcoming potential of semiconductor breakouts. Speaking of breakouts, I'll give you guys a clap. Well done. China stock going up against all odds, against everybody thinking that it was crap. And as we've remained consistent here, I've got to say well done to each and every one of you because the area was solid. I don't care what it is really. It's just about too many people short, similar to Ethereum, way too much negative sentiment. If it's in the press, it's in the price. Remember that, guys, the motto to live by in the markets. And of course, in general, just cheap valuations. People are starting to wake up to the valuations on tech being way less and still some potential innovation there. And obviously that's getting priced in a little bit at this stage. It can go higher, we believe. Now let's move over to US 2K. No breakout, 23.25, 23.30. That's going to probably coincide with the 6,100 on the S&P. And of course, the NASDAQ breaking through that 21.9 important level to get an all-time high. Things are starting to fire on these markets. They're starting to get rid of the tariff, I guess, jitters for now. And it is going to be a very interesting inflation-based week. Now let's talk about crypto for a moment here. So as we know, XRP, Solana, and of course Ethereum have come under incredible sells recently. No more than probably Ethereum, though, when it comes to just a massive blowout sell. And everyone was heavily short this, don't get me wrong, and shorts are actually still building. But could that be about to change? We've seen a bounce off 2,600, which is the most traded range. And of course, we have a couple of key levels to look at, 29.50, and then of course, the more important 34.50. and the break of the just generalized downward trend line. There's a lot of exciting levels coming up for Ethereum should it be able to base off. Some definite positives here are pretty high fear, Bitcoin still holding structural, we'll talk about in a moment, and of course most traded zone with a bit of an oversell. Let's now have a look at Bitcoin though. Now a lot of people are concerned about this type of thing, divergence. I don't know what do you expect. You're always going to get divergence when you have a pullback in time style market that is slowly edging out slightly higher highs. Remember, this indicator is always going to show it. What is the MACD indicator? You might want to look that one up because, of course, it's always going to happen with this type of structure. Now, does that mean it's a cause for concern having this type of divergence? Well, it's always a worry for technical analysts, but the ultimate thing here is this a distribution pattern? And ultimately, I look at these 2 weeks. I look at the big sells, the huge liquidations, and for now, I still think the bulls are in control. So you might say, but Tom, this thing's going down to 65K or 82K or 88K or whatever. Is possible. Of course, anything's possible. Crypto's not exactly where it was a year ago when it's much easier to go, oh yeah, bullish. 2025 is a lot harder. But you've got to look at it. Even if you consider these all as dojis or equalization or equilibrium candles, we just got a little bit of a bullish move. Again, this is happening in a fearful environment. And we know it's a fearful environment because people are rating more bears than bulls. And rightfully so, because they got liquidated. Unfortunately, people got liquidated last week. The biggest liquidation ever to occur to retail traders just happened. Who's going to be bullish off that? Probably not that many people because people got hurt. You know, it's bad out there, guys. It's bad. So let's have a look now at Tuesday, the Feb 11th. And that, of course, is Fed Chair Powell straddling that CPI, squeezing the narrative. Look at him. He'll be like over here, you know, it's data dependent. Over here, the data comes out. Maybe some inflation is shown. Oh, we think we've still got it under control. Don't worry, guys. You know, you can just imagine what's going to come out. Regardless of what he really says, the market's going to react a certain way. And that initial reaction could be wrong. Sometimes the first 30 minutes, 1 hour could be wrong. But if it does go off in one direction and then the opposite, especially if that opposite is bearish, then bullish, and we get through 6,100, I think we know that that could be a bit of a squeezy effect as people be trapped offside. If you like today's video and you want to learn more about what we do, jump on over to our 7-day flash sale and learn more. Advanced course and day trading course I highly recommend if you want to learn more about markets. And obviously follow us over on X. And if you're from Perth or Brisbane, Australia, then check out our free trading events coming up. They're going to be fantastic. Love to see you there. Thanks so much, guys. We'll see you in the next one. And I guess the general consensus is today is we're in a bunch of pullback in times. We're in, of course, a lot of sideways markets, but the trend predominantly coming into these has all been bullish. So until you have the evidence to go the other way, why should you? Bye for now.